Welcome back to the Daily Nugget, daily property insights, one topic, 20 minutes or less, 7 days a week. Myself, Lotze, and joined by property investor and cash flow specialist, Jono, Frankle. And Jono, a question to you today is how to calculate cash flow.
Absolutely, and this is a very important calculation that you need to have in terms of being a property investor, because what we're looking at is essentially how much income the property is creating for you by then taking off the expenses, giving you a cash flow. So the calculation, what you want to do is you want to take your rent that you accumulate. Generally, people work their cash flows off a monthly, but you can do it annually. So you take, let's say, if we are doing annually, annual rent less our expenses. So your expenses are likely going to be your interest costs. You're also going to have your management fees. You're also going to have some of your monthly operating expenses, your rates, your insurances. And once you've taken off all those expenses, what's left at the end of the day is your cash flow. And this is the money that's essentially coming into your bank account on that weekly, monthly, yearly basis.
And cash flow is sort of one of those numbers, or the numbers in the box we talk about it in the property investor world, that it's sort of the number that you look at straight away. Is it $50 a week positive? Is it $500 a week month positive or negative? And that can dictate what a person does or wants to do with their property going forward, or where they want to take it on. And I see it as sort of a critical number to know in your property investment journey.
Absolutely, because the concept of buying high cash flowing properties gives you the ability to earn money while you sleep. It gives you the ability to have an asset that is creating a cash flow for you. So you really want to ensure that the properties that you're purchasing have a large amount of cash flow attached to them. So there's the ability, if we have some interest rate changes, if we have some unexpected bills that come in, if there is some vacancy, which can happen, that is accounted for, and you're still making sure that you're earning an income from the property, and the property is not essentially a negative property that you're essentially paying for your tenants to live in the house.
Yeah, totally. And one thing just to make clear, when you see or hear people talk about the cash flow of a property, like again, if it's $50 a week or $100 a week, whether it's positive or negative, one thing to consider to anyone that's listening or watching, that number does not include any of your tax obligations. So that's the money that it's positive, negative making, and your tax obligation sits behind that, because it's so unique on everyone's tax obligations, whether it's personally owned, whether it's in a trust, whether it's in a company. Cash flow only looks at the number before your taxes.
Absolutely, and it's essential that you engage a tax specialist at that time to make sure that you're as tax efficient as possible and have the right structures in place. Something else to really consider, though, in terms of the cash flow is how much interest are you actually accumulating or attributing to the cash flow calculation? Because you often hear about people saying that their property is cash flow positive. But if you have no mortgage attached to the property, there's a massive expense there, which you're not having to account for. Yes, you can create a cash flow positive property. So those strong properties are going to be ones that have a high cash flow when they are still leveraged up higher with a mortgage. So that's something to seriously consider.
Awesome, and thanks so much, Jono. And to anyone else that's watching or listening, has any questions or details or want to know more about this, all our details will be in the description, depending where you're listening or watching. And thanks for coming over to the Daily Nugget, daily property insights, one topic, 20 minutes or less, 7 days a week. And as always, hope to see you tomorrow.